In this video we are going to analyse Eargo, ticker EAR. So to get straight into our resistance levels, what are we going to be looking at? And we can see we are currently pushing towards the closest level, which is going to be this first deviation on the daily, which is around $3.90. And then right after there we do have the $4.05 resistance, which is our second deviation on the 4 hour. Also paired with this is obviously you're going to have that $4 psychological level. So really, if Eargo can push to $3.90, expect heavy resistance. So you could easily get probably a short play out of that, expecting the pullback. And even if it's going to continue down, we would expect quite a harsh pullback. And then if it can break over this level, meaning kind of we break over this 405 level, break quite a bit above it and then come back, retest it, and as long as buying pressure comes in and we can push further up, we would then expect a push to that next resistance level. And where would that be? So the next resistance level we have is around $6, with the ones after that being $8, $9.50, $15 and $21. Obviously a lot of them are very far away, but the ones we are really just paying attention to right now on EAR is really this 390 to 405, because again, heavy resistance, and if we can kind of break over this level, come back and use it as support, that could be a big breakout level. Now onto the support levels. What are we looking at if it starts falling in price? Well, as we did create a gap yesterday, or from yesterday, we do now have a support level at 203. So if we're holding this stock short, really it's going to be one of the key targets we're looking at, just because when we do fill these gaps, we do tend to bounce. But we can see there are multiple gaps on this stock, so you can look at these as key levels. You've got the 70 cents, and they're really going to be the key two because they're the most obvious ones. Now if we try and look at standard deviation channels as support levels, we can see they really can't use any. I mean, we have one at this 213, but apart from that we only have half deviation, so you could be looking at the $1 and the 115, but do take into account on the 115 that is a half deviation. So if you're looking to trade that, we usually recommend that you either reduce size and or just look for more confirmation, because again, it's not as strong as those whole deviations. And if you're looking maybe to trade off this $1 half deviation, you're going to be paired with the psychological level of $1, so that one should still be quite strong. But those are the overall levels that we're looking at on EAR. If you enjoyed this video and you want to see another analysis video, why don't you check out this video here.